Hello and welcome back to goldstocktrades.com. Today we have a new and special guest with us, Steve Alfers. Steve is chairman and CEO of Pershing Gold. Pershing Gold can be traded as PGLC on the OTCBB. Thanks, Steve, for being here with us today.
Well, thank you, Jeb, for having me. I look forward to this conversation.
Steve, you have many years of experience in the mining sector. Could you tell my readers a little bit about your background and what made you interested in coming into the CEO role of Pershing Gold?
Oh, I'd be glad to do that. Jeb, I started as a lawyer practicing in the United States in the 1990s. My legal specialty was mining and mining law both in the United States and around the world. For 10 years, starting in 1989, really through that whole decade of the 90s, my specialty was the privatization of state-owned enterprises around the world, particularly those state-owned enterprises in the mining space that were coming out of the former Soviet Union. I left the practice of law in the early 2000s to start my first junior mining company. That was a company that was focused entirely on Nevada. And we made a company, took it public in Canada. It was called NewWest Gold Corporation. NewWest was public in 2006. We merged that company into Fronteer Development Corporation in 2007, and Fronteer eventually was acquired by Newmont just in the last few years. When we merged my company into Fronteer, I went to work with Pierre Lassonde and David Harquell to form Franco Nevada. Franco was a royalty corporation that was formed from the non-producing assets that were in Newmont. For several years, I worked with Franco, finally as their chief of U.S. operations, and helped them with acquisitions in the gold space. What I've always liked to do is to build companies, and when Pershing Gold came along, it was an opportunity to work with a couple of investors who made a significant acquisition in the United States in the gold space. And I joined that company in 2012 as their first hire as their chairman and CEO, and we put together a team around the Relief Canyon project, and that's what Pershing Gold is. So that's my story, and that's how I came to Pershing Gold Corporation.
Steve, we've recently seen a decline in the junior gold mining sector, but Pershing's holding up quite well during this sell-off over the past couple of months. Could you explain to my readers what the key fundamentals are behind Pershing that may be the reason that's kind of causing this outperformance versus other junior miners?
I'll be glad to do that. In the first place, Pershing Gold is an emerging producer. And in that way, while we are a junior, we're a pre-production company. We would be lumped into that space along with explorers, developers, and other emerging producers, and some of the smaller producers. And in that space, we generally will outperform the exploration companies because the metrics for an explorer are quite a bit different. When you have a company like Pershing Gold to be valued, any analyst can look at that company, look at the gold inventory, gold resources that that company has, and put a pit around those and run discounted cash flow analysis and come up with a valuation. And that metric for valuing companies generally is quite a bit higher. And in that spectrum of emerging producers, the closer a company gets to production or positive cash flow, the higher that valuation will be. And so just becoming an emerging producer rather than an explorer sets us apart from most of the companies in our space. The other thing about Pershing Gold is it's in Nevada. It's a company that is in a safe jurisdiction, and in the last several years, the importance of being in a safe jurisdiction can't be overstated. Pershing Gold, in comparison to its peers, is a low capex company. Among the asset suite inside Pershing is not only 3 open pits, but also supported by a nearly new heap leach ADR plant and heap leach pads that are all fully constructed and permitted and ready to receive ore at this time. We turned a corner here in just the last few months because while our processing facility had been fully permitted for the last 2 years, our permit to start the mine was just granted in the last month, and so we can say right now we are now fully permitted and ready to start. What that does for an emerging producer is it underscores the time to cash flow, and risk is associated with time. So if we were a company that were looking down the road 4 or 5 years before we could have a plant constructed, financed, and built and permitted, there's a greater risk around that. In our case, it's a matter of months to positive cash flow, not a number of years. Another reason that we tend to outperform some of the other peers of ours is our cap structure. We have no debt. We have a preferred stock on our cap structure, but there's no coupon and there are no onerous covenants to friendly preferred. So this is a company where the common shareholders stand right in line with one another. And when there's upside in a company like this, the common shareholders get the benefit. One final reason is that Pershing Gold is a company with lots of upside. We have an asset that can be brought into production in a matter of months. It is an open pit heap leach operation. It's a project that has now some size. We've been successful in growing the resource at Relief Canyon from something shy of 100,000 ounces of all non-compliant ounces to 717,000 ounces 43-101 compliant. We did that in a matter of 2 years. We have increased our control of the district. We started with 600 acres that were occupied by processing facilities, and the other 600 acres we had were mineral rights. Well, we grew our land position there from a total of little over 1,000 acres to now more than 25,000 acres. Now, what that means to us is that we have not only the elbow room to grow the asset, to grow the mine, we also have the exploration potential in one of the most exciting new trends in Nevada, with a dominant land position that starts at our border with the important silver producer Coeur d'Alene all the way to the end of the Humboldt Range. So for us, all of those things I've just talked about have added up to a low capex, low risk, near-term producer, and in the least risky side of that spectrum in the gold space.
Steve, over the past few weeks, Pershing's released some impressive drill results from the exploration program at Relief Canyon. Could you highlight some of the upside potential here with this current exploration drilling program?
Yes, I'd be happy to. We have an aggressive drilling program underway right now. It really has 2 major components. We are stepping out drilling to through our north target area. There, as I described, our situation on the ground is the Relief Canyon mine is a previous producer, produced in the 90s by Pegasus, and it is comprised of 3 open pits that were mined to very shallow depths. We have been drilling much deeper since we've been on the property starting 2 years ago. And that drilling had indicated a discovery of 3 stacked zones of mineralization not only in the pits but to the north of the pits. So this year, our program is to continue to expand the gold inventory on those pits. We're doing step-out drilling to the north there. And the important takeaway from the results that we've been releasing there is consistently we are producing much higher grades of material than have been existed in our existing resource. And as we continue to drill that out, it's plain that off to the north, the deposit is going to get bigger and it's going to get better. At the same time, we're drilling off to the north end of these three pits. We've added a drill rig that has begun drilling to the south end. We believe that the evidence shows that these three stacked subparallel deposits that comprise Relief Canyon are continuous off to the south and to the north. Well, we're going to test that with our drilling program to the south. So those two programs are the drilling that is focused entirely on expanding the existing Relief Canyon mine. We have 83 holes so far this year in the north target area, and we've planned 16 holes this year for the south target area. That brings us to something like $3.5 million or so spent on developing the deposit at Relief Canyon. We have one other element of our program this year, and that's drilling has now commenced on our Buffalo Mountain project. Now, Buffalo Mountain is different from what we're doing down around the Relief Canyon mine. Buffalo Mountain lies along the range front of the Humboldt Range, 2 miles to the north. It is up within a mile or so of our property boundary that we share with our friends out there, Coeur Mines, Inc. And we're finding that the indications of mineralization there are quite a bit different from what we've experienced down at Relief Canyon. So in that sense, it's a very exciting target. We have spent most of this year developing our targeting strategy there, and we now have planned 12 holes, 7,100 feet, and we've budgeted between $500,000 and $600,000 to drill that Buffalo Mountain target. You could consider Buffalo Mountain to be an exploration play, Jeb, and that gives me a chance to make a point about how we at Pershing are somewhat different from most of our peers there. We are developing and aggressively moving along the Relief Canyon mine to bring it into production and to get the company to positive cash flow. But we never lose sight of the fact that in Nevada and in a productive trend there is always the potential for a discovery, and it can be a major discovery out there. And so Buffalo Mountain is that kind of target area. So we have a drill rig there now. They're on their third hole. We don't have results back. That target area is significantly larger than just the 12 holes will indicate, but that's where we're going to start. So that's our program for this year. We've been releasing results as we get them, and they've been pretty stellar. And I refer you and your readership to have a look at those results and see why I'm so excited about it.
Steve Alfers, Chairman and CEO of Pershing Gold, which can be traded as PGLC on the OTCBB. Thanks so much for being here with us today and for giving us an introduction into Pershing Gold.
Well, thank you, Jeb. I appreciate your interest very much, and feel free to give me a call at any time.